Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for January 2020. Let's take a look at key highlights of December 2019. After having inverted earlier this year, the US yield curve has normalized over the past 3 months due to easing US-China trade worries, strong US payrolls data, and a not-so-dovish Fed, all of which have lowered recessionary worries in the US. Chinese manufacturing PMI rebounded strongly in November, moving back into the expansionary zone after having contracted over the last 6 months. US and China have agreed to the Phase 1 of the trade deal, wherein the US will ease some of the tariffs imposed on Chinese goods while also selling more American goods to China. In India, fiscal pressure will prevail with reduced tax collections and slowing down of GDP growth. The gap between government's revenue and spending stood at Rs 8.07 trillion at the end of November 2019. This is Rs 1 trillion more than the full-year target, taking India's fiscal deficit to 114.8% of financial year 20 target. CPI inflation inched up to 5.5%, driven largely by uptick in vegetable prices. Core inflation stabilized at 3.5%. We expect headline inflation to move towards core inflation as seasonal volatility fades. Improvement in global liquidity since the last 3 months and sustained surplus liquidity in domestic market are expected to be major drivers for Indian capital markets in the near term. Recovery in global economy with recessionary fears subsiding has helped in increasing risk appetite. This is clearly visible through lessening of negative yielding debt from a peak of $17 trillion in August 2019 to $11 trillion in December 2019, which also shows that money is moving towards riskier assets. FII flows were positive to the tune of $3.1 billion in December. MF flows in equity fell to Rs 14 billion in November from Rs 70 billion in October, but the fall could be a result of profit booking. Nifty has witnessed a rally of 13.7% post-corporate tax cut. NSE mid-cap and small-cap have also rallied 10.9% and 7.4% respectively in the same period, showing a promising recovery in the broader market. Surplus liquidity at global as well as local levels is expected to be a major driver of capital flows into Indian capital markets. Factors like recovery of global economy and stable food prices may also have a positive impact on the performance of equity markets. RBI went on pause mode for December policy and decided to hold the repo rates at 5.15%. In the MPC minutes, most members clearly stated the need to slip on fiscal deficit target to support growth. RBI conducted an operation twist in the last week to correct the steepening of the curve and better aiding transmission at the longer end of the curve. The interbank liquidity has remained in surplus at a daily average of Rs 2.7 trillion and reaching a high of Rs 3.3 trillion on 5th December 2019. Due to sustained liquidity surplus and improvement in investors' risk appetite, compression of spreads in case of corporate bonds has already begun. It is expected to continue subject to RBI's monetary policy and macroeconomic liquidity.